All right, hi everyone. Thanks so much for joining. This is our first YouTube live stream, so hopefully we can get some more of these. But this will serve as a good practice run. Hopefully everyone can hear what I'm saying, and the screen quality is good. As I say, this is the first time we're trying this, so if you have any feedback, again, definitely do send it through in the chat window. We've got some members of our team kind of sitting on and can help respond to any different questions. Anyway, the topics of today's kind of impromptu webinar are going to be all around focusing on increased sales and how you can do that using life design analysis. So the first topic we're really going to start with is something very simple, something that comes up for the majority of advisors' business, and that's the term sales. Again, this is, a lot of the times it's our family market, our younger market. Almost anyone with a liability out there has a need for term insurance, and really we want to show you how you can more easily turn over the leads that you do get, more successfully close them, and actually help upsell or sell them on term lengths that more suitably fit their time needs. Now, what we typically find is that consumers out there do go and search the market. I think the stat is somewhere in the range of 70% of consumers are actually online already fact-checking insurance prices. What I find is typical about sites out there, though, those ones where you'll get the rates from different companies and they'll rank them, is that they're already focused on the type of product a client needs. So, they specifically ask, do you need a term 10 quote, a term 20 quote, or a term 30 quote? And the problem is that most clients don't know the difference as to, why a term 30 or term 25 would be advantageous for a 25 to 30-year mortgage versus some rock bottom term 10. They also don't realize, without being in the industry, how sensitive underwriting requirements can be as you age, and how those prices, regardless of health, actually will increase, and how that compares. So our first topic is really going to be around a couple different strategies in the term market. Following that, we're going to transition into maybe the next stage of an advisor's business, and that's turning some of those term policies that we've sold into more permanent forms of insurance. So as clients kind of transition from, we're young, we have kids, cash flow is important, to, okay, we've established ourselves a little bit more, and we want to, change that type of insurance. Term insurance has been said to be like a diaper, and at some point it needs to be changed. And, a lot of people will get away with changing it for quite a bit of time, and then all of a sudden run out and realize that they're either not healthy enough to purchase permanent insurance anymore, or because of their age, it's too costly. So we want to show how we can perform a policy review, basically to highlight and show our clients the advantageous nature of buying permanent insurance early or at that sweet spot. The next policy we're going to show is really a cascading or a layering of insurance to really find the right balance. Again, cash flow is obviously a concern for the majority of people. Whole life is a fantastic tool for the high net worth, ultra wealthy people, which of course you can show in life design analysis as well. But for the majority of people, doing something like a permanent base, maybe 1/3 of the total insurance coverage or more so, but with some term riders on it, so that as their needs change and stagger over time, we're actually adjusting the insurance benefit to follow suit there. And then afterwards, we're going to show how we can actually share these with our clients, how we can get in front of them and give kind of new and creative ways to get them engaged and interested in these policies. And again, engagement is nothing without us knowing about it, so we're also going to highlight how we can get notifications and give a couple ideas around campaigns, all using case sharing. So for the purpose of this webinar, I'm obviously illustrating everything on life design analysis. And for those of you not aware, I'm Charlie Conron. I'm the CTO or Chief Technology Officer and founder of the company. I actually started this company with my stepfather, who is a 50-year insurance veteran. And really the way we kind of created it was he brought me into his office and said, what can technology do for the insurance world? And I really saw it from the consumer perspective of, this is really confusing. There's a lot of numbers, and we don't really present these solutions well. So I actually made this program to help communicate those solutions. So it really is a software that's built in the field. If you haven't done so already and you're watching it, if you're interested in the very slightest, do sign up for a 30-day free trial. There is no risk with with credit card information. We don't collect it until after you've seen the product and got some value from it. And from the time that you do sign up, again, you're going to have access to everything that I'm showing you today. So we start you with our best product, the Premier package, and then again, we have different levels of subscription. Now, it should be noted that this is a web-based software, so no matter where you are, if you're on your tablet, your smartphone out on the golf course, MacBook, laptop, or even PC, again, you can access the platform and all your cases that you've created, even create new quotes and send them out to clients, get notifications anywhere. From inside the software, again, this is all white labeled for you. So again, you're going to be able to go into the account settings. When I produce these reports that I'm going to show in our case studies, just remember that you guys will get to customize this with your logo, personalize it for your specific niche brand, and really customize the output of what pages that you'd like in there. But I always like to mention it's not our logo that goes in the final version of these presentations. It's going to be yours in there. I'm going to start with our first concept. So again, as I say, the majority of these are building new cases for you guys, but all the cases that you do build are going to be managed and saved. And there's even a managed clients area where when you're looking for those opportunities or say those in-force policies that we're going to go over in our second topic of converting more of your existing block. Again, the managed clients area, which actually kind of filters out all those term opportunities, is going to be a fantastic resource in finding some of these policies that we actually want to service and saying, okay, we sold this back to you in 2011. A lot has changed since then. Maybe it's time to review it. And again, it's going to filter it out and give you things like notifications on these opportunities. So without further ado, again, I want to get started and creating our first case and just highlight some of the functionality of how we can compare term products. So I'm going to make a new case here, and I'm going to start off, again, if we had created a client before, you can see from that manage clients area, I can pick any existing client that I've created before. But I'm going to pretend that we haven't seen the system before, and we're actually going to create a new client. So I'm going to just say this is Mr. Family. I'll just say this is kind of the family market. And again, I can give it a birth date. I'm going to do 1977. So I'm going to say this guy is just turned 40. He's sort of in that middle spot here. And again, if he was a smoker, I'd simply check that off. Now, again, our system's nice because once we create a client, we have all their information going forward. So that's a little bit of that client relationship management aspect of it, or CRM portion that you might think. So you can enter additional details like their email address, phone numbers, addresses, really anything that's going to make it helpful for you later on if you have to go look up their contact information, even as I say from your smartphone. So if you're out and about and quickly need to pull up your client's phone number, it can be really helpful having this kind of information in there. And again, some of it, as I say, can be imported into the system directly. We do have an import function. So again, if you're already using a CRM, save yourself some time. You can import all those clients just to get some of those filters. So you can see once I create Mr. Family here, this client is actually going to be in the system until I delete them or deactivate them or such. But again, any kind of cases that I do for Mr. Family are all going to be tied to this one client file. Same thing with needs analysis tools within the software. Again, every time I do one of those needs analysis, again, it's tied to Mr. Family. So again, we have that kind of 360-degree view of this client, not only their personal details, but what we've compared for them. So and kind of building that audit trail. Now, normally what I would do is I'd start from a needs analysis, but again, I'm really just going to focus around some term products and how to get them in front of our clients in a variety of different ways. So I'm going to pick a nice kind of round insurance benefit here and say $500,000 of term insurance. But again, this value could vary depending on your client. You may have a certain number in mind that you guys have come to based on liabilities, or again, it could be a larger number. But really, it's up to you to decide how much insurance benefit you'd like to search for. And just keep in mind, these can be a variety of different options. Now, when designing the case, really anything is available here. So while I'm focusing on term products today, again, if you're in more of the universal or whole life market, and we'll see a little bit of that later, again, it can be any combination, including things that you'll see like critical illness. And we even have a manual area here where you can input details, that might fall outside of the norm. So we don't have disability rates because of the kind of the nature of the quoting, but you could still manually input that. I've also seen manually input annuities and things like that. that. And of course, we do have our recipes, which I'm going to show after I do a survey. I'm going to show you how some of these report automation recipes really make it a lot faster in searching. The first one really that I'm going to build out here is a simple T10 to T20 to give you an idea of kind of the report. But as you can see, there's recipes for different lengths of term. So one of the things with term, as I mentioned before, is that a lot of consumers are going out there and finding the best rate, but they don't necessarily get educated as to the term lengths and why we would buy, say a term 20 versus a term 10. So I want to set up a really easy comparison that does compare both of those products. So what I'm going to do here is, again, I've already set my face value, and I can see I've got a 40-year-old male here, though I could always change the age with the age override. And all I'm going to do is I'm going to hit plus search for searching the market. And again, what the search function in our software is actually doing is connecting to Life Guide rates. And if you are using Life Guide currently, there's a great reason to use both of them. One, you get a discount to our platform, which is 50%, and two is, again, you're going to have two different tools to be able to search rates, get comparisons, but ultimately ours will put them all together into a branded presentation. What you can see here, though, is that we have an insurance benefit of $500, our client is $40, and I get to select the term length. So we let the advisor build these reports that really are going to be customized and fit the client's need. But what we find is that most clients are out there actually searching their rates for term 10. Again, most of these things will default to regular health risk, but of course you can kind of adjust that as you'd like. You can also adjust things like payment schedules, and even what companies you'd like to search. So I mean, I might just say all companies for the sake of this and show maybe a survey that they may have found online. So I'm going to go ahead and search the market and see which products come out as the best. So you can see we've got some UL Mutual, Humania's up there, and again, it's that Hugo with a nice underwriting. You can see that it's the gold renewal. We have some RBC, some Foresters, and Empire. And again, you can go through that whole survey and look down the list. Again, they're fairly tight within the top 10 as far as a percentage-wise of how competitive they are. But again, one of the nice things about our software is it's actually going to rank and help show, some people will do this live with a client and say, here is the survey I perform, and that's why I'm picking a product like Foresters, for example. So I might say, it is 6.15% higher, but it's some of those member benefits, or maybe it's the underwriting info that I want to add. But either case, I'm going to add the term 10 to the comparison. So again, the advisor is still in control of what products they actually select. And then it's a matter of saying, okay, this is the rock bottom price. I mean, this is the most affordable price we could get for term insurance. But if Mr. Family here is purchasing this insurance because he has maybe 20 years left on his mortgage, let's say he bought this house 10 years ago, went back when they had 30-year mortgages, and now he only has 20 years left. Maybe he's even gone through a term product already and lapsed it at that renewal. We want to show him something more relevant for his time needs, which are now about 20 years left on this mortgage. So again, just to build it kind of manually here, I'm going to go and do another term product. So I'm going to repeat the search. And again, select a different term length. In this case, I'm going to contrast this to term 20. But feel free to get creative with what you're searching or what you're showing your clients. Again, I know a lot of you have that similar sort of stock comparison or similar plans that you like to show people. So again, feel free to mix and match these and customize them. So let's do a search and find out which term 20 actually has the best rate. And what we can do is contrast it with that. And it looks like Vitality comes out at the top. I'll add them to the case. Now, when I'm adding to the case here, it's actually, as you probably saw on the previous screen, it's actually adding all of that pricing data. So again, the initial premium, of course, that's locked in for the 20 years, and then any renewal data for that. Now, I probably won't go into it. I may go into it a little bit later in this video, but you can also add it as if it's a reissue. Again, it takes the big assumption that this client is going to be healthy at age 60 and reapply for that same coverage. But I'll show that maybe in a little bit here. As far as the comparison goes, though, I mean, this is a great way to build and compare two different products. So again, for our client, we know that the term 20 suits their needs better, but they may be gravitating towards that cheap term 10 that they saw online. And so life design analysis, again, for increasing not only the velocity of how fast we can help make the decision and educate our consumer, but also the FYC or the premium that we're going to get on it. Again, all of these reports are more designed to educate the consumer as far as the value to them. So again, it's not necessarily all about sales or an upsell sell to term 20, because ultimately what's better for the client is really what we want to help show. It just happens that in the insurance industry, longer term products are traditionally priced better when we look at the big picture. And again, we don't want our clients getting stuck at around age 70 saying, why didn't you show me these permanent forms of insurance or longer term products that actually suit my needs better, as opposed to, letting them kind of self-direct based around price or based around a certain time point without fully understanding those renewals. But as you can see, I've created this report for Mr. Family, and when you do deliver these reports to clients, whether or not you do them in person on a tablet or in person on your laptop, you can also create a PDF. So if you're more the type to do pen and paper and want to print these reports out, they look fantastic. They look really, really professional. But the key is that the client feels well taken care of. I mean, it looks like you've spent a lot of time, crafting this report, when really that's the value we bring. We're automating this kind of process and saving you time. So I know a lot of you do this already in Excel. We give you a way to kind of speed that up and actually dress it up a little bit too, which really helps with, kind of that the professional presentation that you're giving. As I said, from the account settings, all this mission statement information is also customizable. So I mean, if we were running, say, a term campaign, or that's all we focused on, we may want to use something custom in this mission statement to kind of let our consumers know that that's our focus, or it may even be something personal about the brand that you could add in there. But again, we're going to go into a nice comparison here of the two different products. So one of the things that's really nice about life design analysis is by comparing products, there's sort of a concept called asymmetrical dominance. By comparing something that's nice to something that actually gets really expensive, it helps make that other one look a lot better. And again, helps show the value that, even though this premium of $582 is more expensive than the $345, over the course of the long term, this renewal of the term 10 is going to make it seem a lot more favorable, and that really is the case. Now again, when we look at this annual premium schedule, really the visuals are what help highlight this probably the best. So a lot of people love that we condense all kind of this premium schedule information on one page. As you know, if you had to go into the illustration softwares and print off both of these, you may be sitting there with at least 20 pieces of paper, different fonts, different companies, different disclaimers, but ultimately really the same information, and the consumer at the end of the day just wants to know what is the best price for me, and what what does a term renewal mean even? So really we aim to educate them visually by showing these differences in price and features and basically value in a very visual way to really help communicate. So again, what we can see in this product comparison of a term 10 here in yellow versus the term 20 in blue is that the term 20 initially is a little bit more expensive. But because it's a visual, again, it really puts into perspective how much greater the renewal here is at 10 years. And again, we'd have to reapply, redo meds if we were going to do a reissue. And again, I'll add to this comparison too if we do have a stubborn client with that reissue kind of concept that I was thinking about. But again, really the visual helps with perspective. We can see that this instance right here is a lot smaller than that huge renewal gap later on. And again, that's really what we want to highlight. A visual does it much, much quicker. Again, at the end of their mortgage, what they really want to know is, what does it all cost me? And again, this is a fantastic kind of comparison. Again, we often do this, as I say, in Excel, but a visual is something we can get to much, much quicker. Again, our brain kind of absorbs visuals much faster, but it also retains a lot more of that information. So when we're talking about actually, kind of leaving an impression with our clients, we want to make sure we've done it with these kind of professional looking visuals that really communicate the point. So, I mean, what we're looking at here, if I basically said to you, this is the cost of these two products, and again, initially, yes, that term 10 looked like it was the more affordable option, but now that we see that at 10 years we're going to hit that renewal, we can see that, if we have 20 years on a mortgage, this term 20 is going to be a lot more favorable from a cost perspective. Again, same coverage in both of these plans. Here we'd either have to reapply or drop the coverage, or again be stuck with that great renewal. And again, it's not unheard of that at age 60 to be rated or to be flat out declined. So again, one offers a lot more protection for that need without taking any sort of risk at all of underwriting and being left uninsured. Now, we also break it down. We know that there are CAs out there and people like to see how those numbers stack out. So we also do a nice presentation summary. The one thing that's really neat about our software is whenever there are two products, we're automatically going to show you the difference. And this really helps. If I said, here's the two products, and I saw one was a little bit more expensive, but I said, over the course of your need, in this case, the mortgage scenario we're focusing on, I'm going to save you roughly $14,000. So you can see it's $13,990.80. But I'd round that off. I'd say we're going to save you roughly $14,000 for that small investment of $237 more per year, or $238 roughly per year. So again, really powerful comparison that really helps highlight that, yes, this option of this Term 10 is available, but it's sort of that no-brainer of course I'm going to go for a Term 25. Now, I know a lot of you have websites that may actually have these kind of quoting capabilities where, a client goes on, they put in their information about date of birth, and it spits back, either the best rate or the quote. Well, I want to give you an idea around accelerating not only the way you kind of service those clients. So when you do get a quote, many of you will probably follow up by email. You may pick up the phone and call them and try and get a sense of their needs. Well, I want to think about a way where we can actually engage with them a little bit better. And every time we do get one of these leads, let's say, for example, we do get a Term 10 quote lead from our website. I want to show you again a way we can kind of really quickly turn these around. And again, you could even have your admin assistants, if you have them, do this kind of work to really kind of make the most out of those inbound leads that you are getting. So again, I'm just going to create another one here for Mr. Family. So again, you can see once I've created a client, I just have to select them again. This time I'm going to do a slightly different recipe. I mean, that kind of comparison, I did a T10 to T20. I want to show you how fast you can do it with our recipes of the Premier package. So again, I'll pick that same $500,000 insurance benefit. And I can go into my recipes tab here. So again, every time I get a lead, what I could do is create a client. And depending on the situation, so again, if I did the mortgage one again, let's say we have a client this time starting from scratch, and I just want to take the best T10, best T20, and best T25 rate out there. Again, I can do the same thing. I hit one button here this time, though, instead of granularly selecting each product from the survey, and I can use and run a recipe that essentially is going to find me the best Term 10, best Term 20, and best Term 25. Now, before I said all companies, and I got UL Mutual as the top result, but there are certain companies I may not be licensed with or able to sell, and I might want to go with my preferred companies. And again, you can set your preferences in the account settings to which companies are your preferred, but they may even be the ones with, say, the most favorable term conversion options, because again, that does play into it a lot if we do plan to convert these policyholders down the line. So I'm just going to click Add Recipe. Again, I'm doing the same sort of thing, but this time it's going to add all three products and just show you again how fast we can go from a prospect, perhaps coming from our website, to a T10, 20, 30 comparison. So again, we can see Manulife and Humania came up from my preferred companies this time as number one. Manulife still won that Term 20, and again, Humania got the 25 years. Now, what you'll see is our software automatically sort of sets the time frame of the longest length of product, knowing that if we did have a permanent need, we'd probably show some permanent product in there. It will actually automatically set the analyze to age, so you really don't have to do too much when doing these reports. Again, I think the clock's been ticking for about a minute since I started this second concept, and again, I can go from surveying the market and not only finding the best product to actually having a presentation to deliver to my client. And again, if you think about if you're operating a website and generating leads, or if you have some kind of campaign for inbound leads, as soon as you get one of these, again, you can set out kind of a stock presentation that fits the desired need. So again, if someone's searching for Term 10, absolutely we can deliver that rate. I want to include this presentation for you because I thought you might be better served by some longer term product. Let me know what you think of this. And again, this is a case that we can share, and I'll show some of that case sharing of how we can put these sort of strategies in front of our clients in a little bit. But again, same sort of comparison that we did before. This time we just have a Term 10, a Term 20, and Term 25. And again, as I said, just like with before where we had the Term 20 as the best product, we can do the Term 25 now if we've got a full 25-year mortgage. So I think you'll see sort of what I mean about pairing products for our client specific time needs with the ones that they want. So again, we can see a nice annual premium schedule. And again, the more we push out the time, the closer we can actually see that these premiums really are compared to their renewals. So again, with the term 20, we actually have it expiring, and then going forward here, you can see out to the other products here. So again, at the end of the mortgage term, if this was someone starting right from the get-go, we can actually see that, you know what, that term 25 was the best product for this specific client's needs. And it's really around positioning that over time. Again, if we look out at, you know, sort of the total costs, again, not only is it in force, we can see that it's the lowest premium product there. Now again, there's other metrics in our report, such as internal rates of return, that we can look at. And we let everything as a chart or a table. So again, we do both in chart and table form. So again, once we do have this, again, this is something that we can email to our client and actually send them the information. It looks like we spent a lot of time, but we're actually going to naturally upsell different term products by just using that time paradigm of comparing term 10, 20, and 30. Now, let's jump into our next concept. So let's say Mr. Family gets a little bit older and ages, and all of a sudden he's kind of progressing through his life. So kids are growing up, they're getting through school, and his needs are changing a little bit. We may need to convert some of that term policy that we've sold. So let me just add a new case here. And again, I'm just going to still focus on Mr. Family. So I'm just going to take Mr. Family here. What I'm going to change, though, is instead of being 40, again, I might edit his age, and I'm going to say Mr. Family now is 45. So I will take him, and I will actually just use the age override as opposed to, editing the client. I can, of course, override the age. Normally, this is used for 1 year forward or 1 year back for forward dating or back dating, but you can use it for things like cost of delay and showing bigger gaps in time. So I'm just editing him as he's 45 now. Now, of course, just like before, we can search the market for rates, but sometimes we want to enter a rate from an existing policy. Now, again, we could definitely guess the renewal and search as if he was 5 years younger, but that would only go based on current pricing. A lot of these ones that you have in force, you might want to enter manually. And this is a very powerful aspect of our site, is that you can enter an existing contract manually and make sure you have 100% accuracy in those renewals or what you're illustrating. So in this case, let's pretend Mr. Family here bought a term policy 5 years ago from us. So he's 45 now. He would have purchased this policy back kind of in that original scenario at age 40, and we want to go back and kind of review this policy for them. So again, what I'm going to do here is I bring up, and I'll just kind of step back one here. So what we want to do is we can say plus manual, and we can select the term length of the product that we're going to review. So again, some of them may be term 20s that are coming up to renewal, or we just want to go over them. Some of them are term 10s that we may want to review. Again, we could even manually enter minimum funded ULs or overfunded ULs, and you can actually get quite creative with this area. Now, I'm going to select term 10, and I just want to show just in advance that I'm reviewing an actual existing policy here. So I've actually pulled one here. Again, this one's for $2 million for a male age 34, but I just wanted to show an example. These aren't the numbers that I'm going to use. This is a younger client that I'm using, so I've got a different renewal schedule there. But you can just see this is basically where we're grabbing the renewal premiums from. So this is actually a statement where we have our client details and that renewal schedule. It's just basically these guaranteed renewals that we're looking for. So I just like to show that that's where I get these sort of things from. So again, my policy here though was a little different, and I've actually pulled a real one here. And what I'm going to do is I'm going to say this is an existing term 10. And again, you can add existing X company term 10, you can add your term 10. Whatever you put in the top legend here is really what's going to make it more applicable to the client. And you can even add a description, so this might be a personal recommendation, something to that effect. But anyway, what we want to do here is we want to enter that guaranteed premium schedule for the client. And this one happens to be $1 million insurance benefit. So I'm going to say it's $1,090, and the next renewal off my schedule here is $7,360. My next renewal is $20,900. And my following renewal is $61,040. Again, you can enter things like any subsequent renewals. You'll see that as I kind of enter these, you're always given an option for another one. Certain clients will have more renewals if they're a little bit younger. And again, I can set my renewable to age. That's 85 and convertible to 75. Now, the neat thing about our software here is that it gives you the option to actually enter an issue date. And what the issue date is essentially doing is telling how many years to take off of the initial premium here. So again, if I give it an issue date of say 3 years old, it's going to take 3 years off this particular policy. And mine was actually issued 2014, and it was March 6th. So I'm going to input that as the issue date. Now the neat thing too is that you can actually save this on file. So if for whatever reason the client does not go with the conversion or decides to wait a little bit longer, no matter when we review this in the future, again, we can pull up this premium schedule for this particular policy. And again, I'm going to give it a number 1, 2, 3, 4, 5, 6. And check save as a policy. So again, anytime I need to review this, I'm going to have the issue date in there, and of course our system knows the current date, so it can accurately project where it is in time. And I'm just going to hit save. It's just giving me a warning if there is an existing policy with that number, it will be overridden. I'm going to say OK. And it's basically going to save that policy. It's also going to save it to file so that Mr. Family is going to be, I'm always going to be able to review this policy. Now, with this sort of strategy, again, I just want to make sure I have my $1 million insurance benefit in there and throw it in there. Now, it's really up to me. I mean, a lot of people do these term policies and they might, compare it with a replacement brand new term 10 at the future age, right? So this one, again, was reviewed for a client who was 45 at the time. So actually I should update this because Mr. Family will be 50 now, and he bought this at age 45. And what I want to do is I want to show it's either I can replace it with a term 10 or I'm going to do his term conversion option. So we want to show him some permanent solutions there. So all I'm going to do here is just say plus universal life here. I'm going to be very granular and say I want to search out those rates, this time for a permanent universal life product. And again, very similar to how we looked at term, how we can change those term lengths and things like that. I can choose from my 10 pays, 20 pays, and those limited pay options, or I can choose a straight up T100 or minimum funded UL here. Of course, you could always search in the term area for an actual classic T100. That's just what we call it in here. And again, I'm going to perform the search here, just sticking with regular payment, like regular health risk and annual payments. Again, we can see our survey of all the companies on here, and again, I was pretty ambiguous with what the actual existing company is. When you're doing a term conversion here, you're going to want to select the actual company they can convert to. In this case, originally this was a Canada Life policy, so I want to add a Canada Life UL here. And again, it's nice that it's not too far out of whack. It's about 11% higher than the top result. Again, I might even add the top result in there to say if my client is healthy, they do have the option to reapply with new meds. So again, totally your option as far as how you set these cases up here. Now again, I can also add a whole life product to this comparison, but I'm going to take a look and just look at, how does this existing term 10 compare to a UL first, and actually generate that report. Okay, so we've got our report here again, just like that. Our logo goes here. Whatever we're actually comparing for Mr. Family goes there. And again, you can see in here I've got my premium schedule, which again, of course, because we gave it that issue date 3 years ago, you can see that it's actually adjusted that premium schedule to reflect that we're coming up to that renewal a lot sooner. Again, we're comparing it to a universal life, which has a $14,000 premium, which again is significantly higher than they're paying right now. However, again, what we're going to show is that as time progresses with this term plan, what we're really going to see are some of those guaranteed renewals. And if we thought that's $14,000 was expensive, well, that's what we're in for in the future. And again, even if we start reapplying for term coverage, we might see that same sort of comparison. And again, we break even well before life expectancy, and what we can see is that the sum of premiums for that permanent product is much less than that guaranteed term one. Now, again, same sort of chart of a nice presentation summary. So again, if you're doing this in Excel and burning up your time, stop doing that, subscribe to our software immediately, and save all that extra time for prospecting. Again, showing an IRR if you're dealing with a CA and saying, look, even at life expectancy, even on an IRR basis, it's stronger. Not only the fact that they would actually have to pay those premiums and get there. One thing, though, again, a lot of people say is that term policy, the existing one, was done with the guaranteed renewals, and my client may be healthy at 50 or 50 and 60 and be able to purchase term again. Well, again, for those sort of stubborn clients who, again, think they're going to be healthy forever or think that there's no chance they would be, not given an offer by the insurance company, we can also show them, again, it assumes some risk, but we can show them what a reissue would be there. So again, if we assume and say, okay, well, maybe you'll reapply, and we'll show you, and I'll pick Equitable here. If we add to the case, that's going to add all the guaranteed renewals, but sometimes we want to reapply as if they're giving new meds at each interval or each term interval. In this case, it's 10 years, and our client is 50. So what it's going to do is search at 50, 60, 70, 80, and eventually at 80 or whatever, it's different for different companies, but whatever age it's going to get knocked out and say, oh, that's too old to apply for coverage, we have the option to then either lapse or stop on that guaranteed renewal or keep it. So you can see basically the way I do this, if I click add case, it adds the guarantees. If I want to add it as if we're reissuing or rewriting the term every interval of instead of taking the guaranteed renewal, we can say add as a reissue. Now in this example, I like to see that last guaranteed renewal, even if I make the decision in my mind that I'm not going there. I still like seeing it. So I'm going to say add as a reissue. Now what it's doing is it's essentially, as I've described, it's searching out at age 50, adding the existing premium, but then it's going to research at 60 and 70, and it's going to illustrate it as a reissue. And I really like this comparison because, again, even compared to something more expensive like a guaranteed universal life or a guaranteed level for life product, what we're going to see is that, yes, it's a little bit lower than this like the guaranteed term 10 renewal schedule, but at some point, again, our age is going to keep us from purchasing insurance, and we're going to have to eventually end up with a guaranteed renewal, as you can see. So these renewal periods are not as drastic, though, again, we're still jumping up to $15,000, which is more than the universal life was. Granted, again, we're going to be a little bit older, but we're certainly not going to pay $100,000 per year for term insurance that's going to expire age nearest 85. So let's just take a look at that comparison, though, again, and really kind of educate our clients as to how we can show them those options, and then what inevitably ends up happening here. Again, when we look at it on a cost basis, no surprises here. Even if we do decide to lapse the coverage here, we're losing coverage at age 80. We've paid all this money for nothing. And again, if we decide to even go forward a couple years on that guaranteed renewal, again, more expensive, coverage expires, versus something where, again, nice and level for life. So again, saving money, permanent coverage, always good things. But it's through this kind of education that, again, we're really going to convert a lot more of those term products to permanent products because, again, clients do certainly have a need for permanent insurance. Now, let's go back to the case for a second. Again, we may want to add in something like a whole life product here. So what I'm going to do is I'm going to choose Canada Life Whole Life, and I'm actually going to design a case in the illustration software. So again, we can search rates from across different carriers, but what we find is that sometimes there are advanced quotes like, a participating whole life insurance plan where we want to create something custom. So what I can do here is I can actually launch the Canada Life illustration software. And again, I can design anything at all that I'd like in there. So I'm going to say I'm looking for an Estate Achiever 20 pay. My client here is 50 years old. And I'm going to do coverage for $1 million. So again, you can kind of customize this. And this works with any different insurance company out there. You can control what dividend option there is, any kind of term riders that you'd like to include in there. So again, even in this one, we might say, I'll cover that in my next concept of layering, but again, we can add term riders and ADO. Now, once we get the quote, again, a lot of people are familiar with going view report. We're going to just slightly change our habit of going to the view report and getting the PDF of this report of all the text and numbers and say, we want to actually view the data. So we want to see the numbers behind this quote. As you can see, they give us a sea of numbers, and some of you are probably pulling these out of this spreadsheet and into Excel or into your own made presentations. I want to show you how easy it is in our software. So all I do is actually say export to Excel, and just say yes to any kind of warning message. It just means if there's a previous sheet open, it'll be overridden. And what it's going to do is actually export this data to Excel. So you can see we have all this kind of pricing information about our quote, and it kind of goes on and on and on about some of those reduced examples. Well, this is a wealth of data. We don't really have to worry about how large this file is or anything like that, or any of the complicated nature of pulling it out. All we have to do is either save the whole file. So I'm going to do that. I'm going to save it to my desktop. So I'm going to say this is our Canada Life. And I'm going to save it on my desktop there. And I can actually minimize it, or I can close it all together. I've got the information out of that quote that I need. The other method is copying and pasting, so all I'd have to do is copy the information and paste it in. And I'm actually done with the Canada Life software altogether. As you can see, in our comparison here, though, on LDA, we've got the option, we've added Canada Life Whole Life, and we can actually import that spreadsheet. So again, exactly that file we saved, we don't have to modify it in any way. We just save our quote, we say which one we're looking for, and I've saved it to the desktop, so I'm going to say Canada Life there, and I'm just going to open it up here. And what our software does is reads through that whole spreadsheet file, and it does it incredibly fast and incredibly accurate, and it saves you the trouble of having to go pull different ranges and things like that out of the actual spreadsheets you're creating. Again, this has adjusted the age to age 99, and now we've got a great comparison of some term options, even if we've rewritten and taken that risk, versus our term conversion options. And what I'm going to do is I'll actually get rid of this rewrite one. I think we'll have convinced our client by this point that it may not be the best option because it's more expensive and it's actually still going to expire. And what we'll do is we'll do our simple term conversion case. And this is one of my favorite cases in LDA to really show what you can do with that existing term policy that you bought. You may be thinking about replacing it, not even realizing that you can convert it. So again, anyone in your block of business who is, I would say, even 2 to 3 years old, who you think has a need for some permanent insurance, I would be making a comparison for them. So again, in our system, all you have to do is go into that Manage Clients area, sort by issue date. You're going to see a list of your policy holders that fit this kind of criteria, and what I want you to do is put one of these presentations in front of them, and I guarantee your results increase and your FYC increases because your clients are going to see the value of these permanent products. So I'm gonna skip by the disclaimer. I think you guys get that by this point. And again, we've got our existing plan here, term 10, and our term conversion options. Now, I hope some of you notice, again, that the colors really speak to clients as well. So again, a lot of our report is consumer-centric. So red is more cautionary, yellow is middle of the road, it's okay, doesn't have any cash value to it. It is permanent though, which is nice. But green is really the one that's permanent, it has a limited pay schedule, and it has a lot of cash value in it. And again, our system really helps the consumer we've all been trained on this stoplight system, but it really helps them see certain benefits that, again, subconsciously are kind of being communicated to them. Again, I picked a very expensive plan. So I picked a whole life that's a 20 pay. It's a guaranteed 20 pay though, which is nice. But what I really like about the visual here is that, again, in perspective of this huge premium at $34,000, what we can see is in relation to where our term policy is going, our existing one. And again, even though what we're paying right now is very cheap versus this, this whole life policy, again, it really puts into perspective of what's happening. Again, when we add up all the costs, we can still see that even with that giant premium, before life expectancy, even on a cost basis, it is less expensive. Now, one of the things you may want to do is use our PV metric because we are putting premiums in over different periods of time. So we may want to apply a present value to these. It won't change it drastically, but it will make those kind of term renewals in the future less drastic. And the whole concept behind that is that because of inflation and things like that, in the future when we do get this, say $20,000 renewal, we're going to have 18 to 27 years basically where inflation has run its course. So, as when I think about it, when I was a kid, a chocolate bar was $1. Now they're about $2 a pop, or $1.67. Well, the dollar, as time goes on, due to inflation, doesn't have the same purchasing power. So if we want to do this kind of comparison and adjust what $20,000 would be like in the future as it relates to today's dollar, that's where the PV would come in. So I'll show you the control on that one when we go back to the case design. But again, really good conceptually from client's perspective of seeing, it is the most expensive, but ultimately because we stop paying, we really end up sort of in the same ballpark with all our payments there for the insurance. The one nice thing though about the permanent product is that we're going to get to show some cash value for that extra deposit. And that's really going to be the value. So it's sort of this 1-2 punch of 1A, yes, it's more affordable. Or at least in the same ballpark, even if we use the PV. And 2, we actually have some value for this. So again, when we're looking at the permanent product here, red is what we've deposited, green is the total cash value. And again, what we get a good sense of is that value. So again, we can see when we break even, We can see when the cash exceeds the premium deposited. And again, we want to be transparent. So again, this is a non-guaranteed value here in green. It's based on the dividend, and each year a different dividend is going to be released. But again, we want to show that there is a guaranteed portion of that. And because this is also a guaranteed 20 pay, if I wanted to, I could tell my client, I could say, I guarantee you that you will put in roughly $700,000, and I guarantee you get all your money back roughly around year 31 or age 81. You would get all that money back. It looks like actually slightly 1 year previous to that, right in between those 2 years of 80 and 81 on a guaranteed basis. But I'd probably also highlight and say, while that guarantee is there and people really do like guarantees, you'll never run into a problem selling on guarantees. They have issued this dividend for the last 130 years. It hasn't been necessarily at this current rate that this one's being illustrated. So we also want to be able to show reduced examples too. And again, it's this sort of transparency that helps, kind of eliminate surprises in your practice years down the road if the dividend is to change. Again, we've educated our clients as to the, kind of the different means that, and different kind of functions that can happen depending on the market conditions or interest rates and things like that. So again, we're showing not only the total value, our reduced value, but we can also offer a guarantee and say, I guarantee the cash value will be somewhere in between the yellow line and the green line, and we can hope that it's the green, but, very least if we wanted to cash out at year 31, we absolutely could. So again, really nice way to kind of contrast those values. Again, paid up addition is another one of those things that we talk about a lot in the industry, and I think we take for granted that it's a very jargony saying that paid up additions outside the insurance industry doesn't mean anything. One thing though that I really like is actually just showing that growth. So again, regardless if we talk about what dividend type this is, we can show that the insurance benefit starts here at $1 million and grows and grows and grows. And again, this is another great one with present value, because what you can show with the PV metric on is how, these paid up additions in the insurance plan, or this particular insurance plan, actually fight to keep the insurance benefit relative, as opposed to $1 million, a flat level $1 million 30 years from now doesn't really have the same purchasing power. So again, really nice kind of feature there where you can actually show the PV, and again, same sort of thing with insurance benefit. We can show the guarantees, which are just the face value, or what a reduced example is likely to provide, even at a 1% reduction in this case, though we could control that to different reduction levels. Again, we have other metrics like credit to the CDA. So if you're a corporate person, again, there are more advanced functions in there. As I said, this is a pretty tough sale. To find a client, they obviously have to be pretty wealthy to afford the full paid up edition here. But as I said previously, there is the functionality where we can actually go back to the case and maybe do a layered plan for a family who's, looking to maybe stagger that insurance coverage. So there's a couple different ways we can cover it. One of my favorite ways is though right in the illustration software. And what I'm going to do is I'm actually going to delete my UL. I'll leave one of my whole life plans in there as a kind of a basis to comparison, but I'm going to compare two different whole life products in this kind of comparison. So if you are watching and wondering, can we add multiple whole life products, multiple cash value products, the answer is a resounding yes. In this one, what I'm going to do is I'm going to contrast this full paid up edition Canada Life with the Equitable Life Whole Life. And what I've done with the Equitable Whole Life, the reason I've kind of picked it is I've actually designed, again in the illustration software, a mix, or what I like to call a trifactor, a combination of three different plans. So I've got a third of this, $1 million of coverage of paid up edition here. So again, you can see the paid up edition. But I've actually designed some riders in there. So I've got a term 10 rider that's going to fall off at age 60, and a term 20 rider that's going to fall off at age 70. And the whole idea here is that my clients' needs are changing. They don't necessarily need $1 million all the way through. They need to cover some of those short-term liabilities while they're there, but maybe part of this is the mortgage getting paid down. So again, I'm covering and reducing as that mortgage is paid off and as the coverage is no longer needed. Now again, feel free to play with this balance. I did it in straight thirds, but you may want to add more base, less base, more term in different stages, or even a term 65. So again, really get creative. Think about your client's needs. Think about the time frame that they need those needs and how we're going to illustrate them. As I said, though, the same sort of process applies. All we want to do is we want to design our quote here, view the spreadsheet, and export it to Excel. And this option, I'm actually going to get an opportunity to use the copy-paste method. So again, you can see this quote has been produced. Again, same sort of $1 million initially. Of course, it's going to drop off. All I do is I select everything. A nice little handy bar up in the left here for those of you who don't know this little trick. You can click this to select everything, and just right click and copy it. And again, same as before, I'm done with the spreadsheet, I'm done with my quote software, but instead of putting import spreadsheet file, I'm going to say paste it. And we're just going to paste that whole bunch of data we just copied into the box. You don't have to worry that it looks sort of jumbled. Our software, again, is going to do all the magic for you. Find the exact column. We've done the due diligence to map them out and find exactly the ones we're looking for, and we're going to read that entire sheet, and all you have to do is click upload. So again, I'll reiterate, if you're picking through these spreadsheet files, that's prone to user error and picking the wrong column sometimes, or pasting the wrong data, maybe spending a lot of time ranging it. Again, this is really going to help save you time, and that's time you could be out there spent prospecting. So I've got my full paid up edition here now, and I've got my third, which is a permanent, 1/3 permanent, and then 2/3 are a mix of term 10 and a mix of term 20. And I'm just going to generate my report. And this one's all about layering or cascading those insurance needs to our clients. So we've got a report here. Again, I'm going to scroll into kind of the meat of the presentation where we can see that, that $34,000 sale, it's a great sale, but I admit it doesn't come up all that often. I wish there was that many people out there who could afford these sort of plans. Not everyone can, but they're really special when they come about. More realistic, though, again, might be this Equitable Life here, where we've done a layered or staggered approach. And again, that still works with the Canada Life as well if you're, it's not a company bias here per se, but I just wanted to show a couple different options of how we can stagger these sort of pricing options. And you can see $13,000 versus the whole 34 is a lot more palatable. I mean, a lot of people could probably say, yes, I could take $1,000 a month to protect my family. And again, build some cash value in the process. You can see the price, the software's actually picked up that at 10 years the price does change. Some of you may wonder, why is that? Well, that's that term rider actually falling off. So you can see the price gets more affordable. At the 20-year mark, again, we know our premium schedule ends on the paid up edition part of it, or that permanent base. But we also have the term 20 rider designed to fall off then too. So our coverage, or our premium, I should say, stops at that point. Again, when we look at it, we're really comparing apples to oranges here, but that's one of the nice things. Again, we can give our clients options for the economy, sort of route, or the full paid up editions, and kind of let them decide on what fits their needs better. Again, we're providing that transparency. Obviously, a very different sum of premiums or different costs in the plan, showing that third mix is a lot more affordable, a lot more palatable. Now, when it comes to cash value, again, we can see Canada Life has the big cash value. We looked at that one before. We are going to see that the Equitable Life one is a little bit smaller, but keep in mind this is only 1/3 of the same coverage. So really, we could expect only 1/3 of the same cash value. But I will point out, when you're looking at two different apples to oranges, it's going to make them look visually different. Again, we match that scale so that we can actually visually see that this has a smaller cash value. What I would focus on, though, is that because it's only 1/3 of paid up editions, really important is that all the deposits that went into this plan, including those term costs, are recouped at that 20-year mark. And even if we look at it on a guaranteed basis, we're doing pretty well on that sense, or reduced, and saying that, no matter what, I mean, it's very likely that, it's guaranteed that we'll stop paying at 20 years, but it's also very likely we'll have more cash in the policy than we paid. Again, looking at our insurance benefits, what I wanted to do is really focus on the staggering. So again, what we can see here is we've got $1 million of coverage. At 10 years, again, maybe we're 60, kids have grown up a little bit, we need to drop our insurance down a bit, so that term 10 rider falls off. Now, the neat thing I think about the paid up edition is it's always fighting, so it's always kind of rebuilding, because you've always got that third of permanent base. And again, you can see we've gained back up there again, and again we get, at 20 years, that's when our term 20 rider drops off. And again, the paid up edition, we're left with only the permanent base. And you can see that $333,000 permanent base that we actually purchased in year one, under the current dividend, has actually grown to $650,000. So it's done quite well in that grow up stage. And again, the more base that you add into these plans, the more it's going to build up. Now, again, as we grow and grow and grow, we surpass, so let's say the $1 million by life expectancy is sort of our goal. We can see we're right about there. So we've got $995,000 at life expectancy, but it was a lot more palatable. So again, the other plan certainly was a lot more expensive and has more insurance benefit, but if all we were trying to accomplish was $1 million and have some form of permanent, have high coverage when we're young, and some permanent protection when we're old, some access to cash value, that's really what we're looking for. And again, you can overlay these. Again, you can see a very strong cash value in that plan, especially considering, again, it looks like it's almost half the cash value, considering it was only a third of the permanent base. So that's how you can layer plans to your clients. Now, again, with all of these strategies, it's great to get in front of our clients, but I think clients are very busy these days too. I want to highlight the ability to actually share these cases. So what I'm going to do is I'm going to go to the top of the report where you could generate a PDF or a printed copy of it. By all means, present this live with your clients, or even do a screen share similar to what we're doing now. Of course, not on YouTube Live, but if you're using a screen share meeting, you can do that. One of the neatest features, though, is that share button, as I said. So what I can do is, once I'm set with my report and I've got it looking the way I want and I'm about to deliver it to a client, is that I can generate an actual link to this case. And again, all I have to do is say copy URL here, and it's going to copy the URL to the clipboard. Keep note, I can also set an expiration date too. So if I want to say, this case is good for a week and then expire it, again, I can pick a certain date that this case is going to expire on. I'm going to leave mine open-ended. But again, essentially all you have to do is create your case, click the link to share it. Now, what I'm going to do is I'm going to open up a new incognito window and actually visit this case. So this is, again, thinking about those campaigns. Even if it's a term campaign, you get your inbound lead. They say, I'm looking for term insurance. You deliver the kind of the comparison or the options for the client in a unique link, and they can actually interact with this case, again, all on their own time, review it with a spouse and see exactly what you're proposing. Again, even having the ability to have a hosted case online for them is extremely powerful, and really highlights that you're at the top of your profession. Now, you'll see along the left hand side, whereas in our software I was going back to the case, the client, when they're viewing it, actually has the option to comment on this case if they're on their mobile device. So if they're looking at it on their smartphone, they can actually click on this and call you. They could send you a quick email or even visit your website. So again, it's further enhancing that brand that you have. Now, they can go through this full report. They can kind of click on and see what reduced examples look like, what the premium costs are like, and really kind of engage with the product. Again, looking at reduced examples, they say the same. Looking at cash values and interacting with them and seeing the reduced examples. And again, ultimately getting to the end of the report. So again, they could look at the different options and they might provide some feedback. So again, feel free to customize any number of these pages for what you'd actually like to see in there. Again, credit to the CDA, really nice compare there if it's a business owner. And again, a nice breakdown of what is the cash value difference in these plans, premium difference. Of course, we even have things like alternate investments. So again, if I was looking at that Canada Life and saying, well, what if I put the money elsewhere? Again, we have an objection metric that shows, actually it's better to have the cash value in the policy, because not only do you get that insurance benefit, but there's actually more cash than we'd get even making, let's say, net 2.5 in the market. And again, we use a net rate. That'd be like, in my eyes, that's like making 5 by the time you take tax off of that and fees and all of that, the rest of it. Again, alternate investment here for the other plan as well. Again, the insurance product, because when we look at tax, it almost always makes a favorable comparison. And again, something like an IRR. And IRR is really neat in this case because, again, we put very different deposits into these plans, and one, had a mixture of term. So IRR really is the great leveler, which just looks at, really, I like to think about it as the efficiency of a capital investment. And again, what we can see here is that term rider option was actually a stronger from an IRR perspective. So, when we're assessing which one would be better to put our capital in this instance, I'm looking at that Canada, or in that Equitable Life as the better option for my client. So again, CAs really love the IRR comparison, and for good reason. Now again, we can also do that in a table. Now, what I really like about this is that, again, I'd probably slim this down for an actual client, but client can comment on it. So, I love the plan. So they can actually add a client comment from that side, and again, a little bit more secure than email communications because it's directly on an encrypted server. Now, the neat thing about that is when the client exits that, so again, we're going to come back to the advisor side, we want to know when our client viewed it, what they were interested in, and actually be able to follow up. So if I actually go back to this case, what we're going to see is that we as the advisor are now notified that a client has visited that case. So I'll just pop in really quickly and see a client has visited the case I shared. All I have to do to view it is just click view, and it's going to take me right back to where we were at that case. So I know which case my client has visited, because if you are turning over a lot of inbound term leads, even sending out these kind of comparisons, you'll get information on exactly what clients were interested, how long they spent on the report, what their comments were, and you can actually use that to kind of find who's just kicking the tires versus who's actually really interested in your product. And again, when you can refine and focus in on only the prospects that are interested, you're going to have a much higher success rate, and again, compound that time savings. Now, as I said, what I think the neat part is that when we share these cases with clients are the statistics that we as an advisor get on them. And again, we can break it down into the advanced statistics of individual page views. But I just want to show, again, I clicked on 16 items while I was in that shared case as the client in this case. I was on that for 3 minutes and 40 seconds, and I fully viewed that. I did not download the PDF, and this is the exact time that I viewed. So again, extremely, extremely valuable as an advisor, knowing that your client has viewed it, knowing how much time they took reviewing it, and being able to action a follow-up based on some of their activity. I mean, if we see they haven't looked at it at all, maybe we need to nudge them and say, hey, have you had a chance to look at it? Or maybe they've looked at it for an hour, and we will know now is the time to follow up for a sale. I just want to take you in again to the advanced case statistics. So again, even if I look at the report as the advisor this time, I can see exactly per page where that time was spent. So I really didn't spend that much time looking at that title page. I looked at the disclaimer a little bit, and I came down into my premium schedule here. And again, it's breaking it down into a per page view at some of these different aspects of the plan. So again, we can see what kind of I grazed by versus what I was deeply engaged in. And again, that's really going to help you determine, what's really interesting to your client. So I mean, maybe you find that they're spending a lot of time on a cash page here or an insurance page. You know that you can leverage that part of the benefit that much better because that's what they're really interested in. Whereas if they spent much more time looking at, say, a cost comparison, maybe we know that they're maybe more price sensitive or really making the decision based on cost alone. So again, we can really help them follow up. But again, it's going to give you actual insight. One of the neat things that we're adding to this is actually the ability to log in too. So if we do share these sort of strategies over social media, again, one of the examples is that I can take this case here and copy it, and I can go to LinkedIn. So again, I probably wouldn't share this specific case, but maybe it's a mortgage case, and I can actually share an article and add a nice image there. So I can actually share that and say, here's a traditional, one example is here's a traditional image of, here's a traditional term policy review. And again, I can share that link when I post it out there. Again, anyone in the world or any one of my prospects who I'm targeting are going to be able to click on that, interact with it, and go directly to my shared case. So they will actually be able to see what I've put together. And again, these can be as simple as like an RESP top up for a child. So again, a lifetime gift for a child would be a perfect example. One I really like is mortgage insurance versus term life insurance and showing that. But there's so many different ways that we can use these shared cases to go with a concept like CI split dollar, and then make our call to action something that says, for your individual review, get in touch with me. I'll just delete this one as it's a whole life case. But that really brings us to the end of the webinar. We've covered the topics. I mean, if you are interested in the software, definitely sign up for a 30-day free trial. And again, there is full training and support on the site. So I want to thank everyone for watching and look forward to any feedback that you have. Thanks so much. Take care.